All right, guys, tonight we are talking about life insurance and estate planning. So we have special guests tonight, Bernadine and Dario. Welcome to the stage, guys, and you guys can run with it and go through the whole entire presentation. Whatever you guys have, go through, and we'll just answer questions or ask questions as we go throughout it. But guys, this is going to be a really good presentation. There's a lot of good information in this tonight. I've already went through all the slides pre the call tonight. There's a lot of stuff that we don't hit on as much as we probably should. This is going to be primarily protecting your money stuff. So we cover this, I think, what is it, week 12 through week 15. Primarily week 12 and week 13 is a lot of the life insurance stuff, the estate planning, and things that we should be focused on. They're not always exciting, they're not always sexy, and they're not always fun, but they're important stuff. And we need to always understand the stuff. And so we have special guests tonight, guys, to cover this in detail. Ask any and all questions. I'll let you guys run with it, guys, but just check the chat, every once in a while, and there'll be some questions that pile in. So welcome, guys.
Thank you for having us. First and foremost, Brennan, I just want to let you know that it's an honor to have us here today, because I don't think you understand how your platform has been shifting the minds of the working class.
Absolutely.
So it's an honor for us to be here tonight. Just want to tell you that.
We're excited to have you guys, and obviously we've talked for quite some time, man. So I'm super excited for you guys to break this down tonight. And it's such an important topic. Like I said, it's things that people just don't care about almost, but it means so much.
Yeah,
it means so much, and I'm gonna run through it as fast as I possibly can for my portion, because we couldn't possibly go through everything tonight. But I'm going to give your group, and pleasure to have all of you here tonight as well, all 45 of you. I'm going to go through this as best as I possibly can. I'm long-winded. I'm the long-winded one, so just brace yourself if I kind of just throw everything out. But I'm going to do my best in giving you the truth, okay? Giving you the truth to empower you and to ensure that you have finances, that you take full control of your own finances, and that you're no longer victims of what's going on out here as we once were. But just to start it off, I want my wife to start off first with a brief little introduction.
Hey guys, I'm Bernadine Philippe. So I'm the estate planning attorney. I've been an attorney for over 10 years, so 12 years to be exact. I started my profession in litigation. I was a prosecutor for about 6 years, and then I went into insurance defense and did litigation for about 4 years. I went on this journey as a lawyer practicing for 10 years. And I said, I want to do law that, I can benefit and help people with certain parts of the law. And I felt like estate planning is one of those topics that is so underrepresented and that it's so important and people don't know anything about. So I made it my mission for me to start focusing more on estate planning and make it my niche as far as my estate planning practice. And that's where, the Breadth of Family Inheritance law firm came from, is just to focus on estate planning to, share the information with everybody.
And I'm the crazy one, okay? I'm the starving artist. I'm the one who just sits on the corner of the street playing the guitar and painting stuff like this. Nothing makes sense on the screen as far as my story, right? I started out in ministry, to be honest with you. I was a youth minister, went into entrepreneurship back in 2014, started a podcast, blah, blah, and wrote a book 2019 called Your Deathbed Confession. My passion has always been not only just community work, community activism, but I always just wanted to help people. I always just wanted to coach. So that's my background. I kind of stayed within the niche of youth, helping youth, but I went into coaching men after a certain amount of time. Now, we're going to go into how did we end up here, because a lot of what we've shown you on the screen right now is a lot of our past and former lives, besides the men's coaching that I currently do. So 2020, we found ourselves in a very interesting position. We come from very blue collar backgrounds, immigrant parents from Haiti. We were told to go to school, go to church, and what's the third one? There's a way they say it in French, but I'm going to spare you tonight. But it's literally school, church, and home, and there was nothing else. There was no entrepreneurship. There was no talks on business. We kind of just fell into a lot of this. And me being the crazy person, I've always kind of dipped and dabbled in entrepreneurship, dipped and dabbled in a community, did things that I felt was true to my heart. So 2020 happened, folks, and we found ourselves at home And for the first time in our marriage, for the first time as a couple, for the first time as human beings, we had to deal with ourselves, and we started asking ourselves questions. You see, we had a great time, by the way, during the lockdown, although it was a very tough time. But we had a moment to sit down and really start asking ourselves questions as to where are we going? Who are we? Where's our family going to end up within the next 5 to 10 years? So we started reading books and talking about books like Confessions of a CPA, family office books. You may not be able to see it because of the light, but we went crazy just reading books and getting coaching. And I know this is a favorite for some, The Creature of Jekyll Island. Please go get this. Highly recommend it. But we started understanding something, because at the core of a lot of our issues was finances.
Right.
And it's something that I didn't like talking about. I never thought I was going to step into the financial industry, because this is what you're taught, right? The financial industry, as Brennan always says, they love the fact that people feel helpless in understanding what finances are. They love the fact that you don't understand financial language and terminology. It's done by design. So here we were sitting there, we were like, wow, like we're learning a lot.
Right.
Like, what do we do with this? So we wanted to do the responsible thing. As we were learning and implementing certain things in our home as well, we were like, you know what? We should do something. We should start speaking to people.
Right.
So we tried to get ahead of the game. We said, you know what? Let's just start off with a podcast. Let's just be honest and just tell people the truth. Let's just talk about our story. You know, our first episode was Young, Married, and Broke, because that's literally was our story. So we were just trying to figure out, how are we going to bring this to the world, right? So my wife, Bernadine, she decided to hone in on estate planning. So she went and got educated, because we didn't want to be just talking heads on social media. So we said, let's go and sit down and actually get some certifications and learn a little bit more about the financial industry. I chose life insurance. So this is where our story kind of, took a turn. We started the podcast. We got into branding. We started learning about this thing called the family office, which is literally the foundation of a lot of what generational wealth is. And everything else kind of fits inside of it, from the investing part, from a CPA, need a CPA, the estate plan, the life insurance, financial advisor, a family heraldic, all the way down to a family constitution as to the crest. This is what our family will do. This is what we believe. This is our mission statement. So we started bringing this out to the world. And this is just the branding aspect of who we were. We went into apparel too. We just launched our apparel brand with generational wealth, nutritional facts. I'm in life insurance. I have one called Life Insurance Creates Generational Wealth. And as we were doing this, we were realizing something, that the family is probably the most underserved market, literally, when it comes to business. We are not served. No one speaks to us. When they speak to us, there's always minivans and houses, and that's it. Nobody really takes time to develop us, help us. So I said, you know what, let's start a business. The core of our business is going to be personal development for families. So we're going to cover the whole gamut of business, children, education, financial literacy, et cetera, and et cetera. But I want to take a pause. I just wanted to give an introduction, but I want to take a pause and go back. So I decided to go get certified as a life insurance agent. And here I am now. It was literally a 5-day study course. Was like 5 days, 4 days, 4 days. Literally, it was tough. It was literally 8 to 9 hours a day of sitting down in the classroom and just literally learning. So week number 1, we're learning about the laws of life insurance. We're talking about SEC. We're learning about the do's and the don'ts. And that was amazing. I blew through that. Class number 2 is where things took a turn for me, and what really developed a passion for me when it comes to life insurance. So here's the professor in class. Her name is Miss Nowak. She's been in the industry for over 40 years. She started in 1980. So she's been a licensed financial advisor with all her securities licenses since the 1980s. And here's this little frail woman in the classroom, but she was strong. And I remember as I'm sitting down taking notes, something happened where she mentioned this thing called whole life insurance. I said, oh, bet that's for me, because that's what I got. So I'm sitting down and I'm writing down about whole life insurance. And she's saying everything about whole life insurance that I was not told about. She's like, the cash values alone. I said, excuse me. She's like, yeah, you don't get the money. And I paused her and I said, Miss Nowak, excuse me, miss. So I raised my hand and she stops the class. She says, Dario, how can I help you? I said, what do you mean the whole life plan and the IULs, I don't give that cash isn't for me. She was like, it's not for you, Dario. And then I was like, well, I have several. She paused the classroom and she was like, let me ask you a question. How much do you pay per month? I said, well, between me and my wife, it's there's a little over $600 between my wife, and we've got children riders. She stops the class. She says, ladies and gentlemen, please hush. Here's an example. Every time I've been doing this class, there's always one victim. Now I'm sitting in the back of the class like, why is this lady calling me a victim? What's going on here? She's like, Dario, don't take it personal. But every class, there's always one person that this triggers on a personal level. So she's like, let me do something. Do you mind bringing all your policies to class for tomorrow? I said, no problem. She was like, this is not an attack on you. Are you okay with bringing that? I said, sure, I'll do it. And she began to tell me little things that I'm going to get into in a little bit. And I went home and I told my wife, I said, hey, matter of fact, I text her in the class. I think we're doing the wrong thing. I think something's wrong here. I don't think we're following the right process. I get home and I'm like, yeah, Miss Nowak said we're doing the wrong thing. And this is not what we're supposed to have. And I had a meeting with her outside of the classroom and said, Miss Nowak, I have child riders for these whole life plans. My kids have whole life insurance too. She's like, never put whole life insurance riders on your children. She was like, I'll explain tomorrow. I come in the next day and I tell you this right now, that's when I realized that this whole life and IUL situation is deeper than you think. It's not just about life insurance agents online trying to make a sale. It's actually an atrocity. Like I said, I've got a lot of paperwork in front of me. I've got a lot of information, a lot of research, but I'm just going to stick to the plan here. Don't let my ADD get in line. So we looked at our whole life policy, and this is one of ours because I'm going to bring personal things to you. So we give you the full idea of what this thing is. So we began to look at my whole life policy, a whole life plus 100. I'm like, yeah, there's something called a cash value. She's like, no, that's not necessarily how it works. And we started going through our own policy. And she's like, Dario, look down here. It says caution when the total loans equal to the total cash value, the policy terminates and the entire tax gain of the policy becomes taxable. And she says, look, the entire cash value is used to repay a loan. I said, repay what? She was like, Dario, do you know that in the state of Florida, I don't know what state you guys are in, not only is the cash value a loan, but there's a percentage, there's an interest rate to it. In the state of Florida, you can go up to 10%. I said, excuse me. I said, I've got cash value. I should be balling. No, she's like, you've only got $79 in it. And we've had these policies for several years. I said, okay. And I didn't ask my wife if this is okay, but I blotted out what we could, but I just wanted to show you all the truth because I didn't just want to be another talking head on here because this is something very serious and families need to know about this. We had child riders on our children. I'm going to explain as to why that's not a good thing either. So I brought this to class and they're like, wow. So I closed my policy to make a long story short. And I'm like, my cash value. Now, this is before I knew how much it was. I'm like, I should be rolling in dough. Nope. $173.66 was my cash value. I tried to blot out as much as I can because tonight is not about bashing any companies. It's not about bashing any agents. It's just giving you the truth. So that was my check. And I'm like, what's going on here? Like, what am I doing wrong? And this began my journey down the whole IUL and whole life policy thing. To be honest with you, a lot of insurance companies have a lot of settlements. They're sued quite a bit. Transamerica, this is some years ago, they paid out $195 million to settle losses over universal life insurance. That's the IUL, because they were not telling the truth. Okay. Now, this is not about, I'll say this as a disclaimer. This is not about it being a bad product or a good product, because it works for some, very little, maybe 0.5%. And I'll explain who it's for as well. So Transamerica has quite a few lawsuits attached to this and many other companies. When I started looking at other companies and looking at what the life insurance companies are saying, because what they're saying is not what the agents are saying. I noticed that IAG says life insurance is not an investment. We have another one here, Mass Mutual. It says using strategies that position whole life insurance as a personal banking. Many of you have heard infinite banking, right? Yes, I had the book. I'll spare them right now, but I had the infinite banking book and family bank, because keep in mind, we're dealing with the whole family office thing. So in a family office, we're like, how are we funding this thing? So we got to start a family bank. Wrong. Whole life insurance using strategies that position whole life insurance as a personal banking and similar concept is inconsistent with Mass Mutual's policy because these strategies are misleading the customers. They promote large deposits, et cetera, et cetera. So I went down the rabbit hole. I'm like, I'm not just getting a life insurance certification and license here. I really want to help out. I really want to know what I've been doing wrong. It was more personal before it became a crusade. And then some guy comes up on my feed. He's like, financial products you can't trust, IULs. I went crazy. I said UC, and he explained it. By the way, Brennan, for all of my clients, this is a part of my slide. There's a link attached to this. So when I click it, it opens up to your page and I can go through and say, see, this is from a CPA. And I always use you as a huge selling point because you're not a life insurance agent. You're not a financial advisor. This is a CPA. This is someone in a totally different industry. Well, same industry, but totally different concentration. And he's like, hey, the IULs aren't good. He has nothing to sell you on this. So I use it for my clients because if I talk about another life insurance agent, you'll say, yeah, you're using your people. No, CPA dude said literally the IULs is a bad product. I'm going to rush through this, guys. So life insurance is life insurance. Oh. Is that it? Pardon me. So life insurance is income protection, not an investment. I think I missed something here. Pardon me. So here's what happened with us. So we got the right policy, pardon me. We got the right policy and we pretty much closed our whole life in IUL policies and we got term. So we got term based on, and it's supposed to be based on your debt. It's supposed to be based on student loans, whatever you owe, whatever the utilities cost is. We got pretty high life insurance policies. This is one of ours. It's 1.2 million. And it's for 30 years. And there's a reason why it's for 30 years is because the intention is not to brag about this. And we used to brag about this before we knew any better. We were like, yeah, we've got $1 million policies, but the intention of life insurance is just to cover you for now. The intention is when you retire, you have $1 million in investments and $1 million in cash and liquid to pass off to your family. This is to protect your income. So this is us right now. I didn't see that. That's why I got confused. So we right now have life insurance and we have real investments, index funds, IRAs, TODs, which are transfers on death, individual stocks. Crypto is very little because it's based on how much we invest in crypto. It's a little bit. I'm still, bumping that up a little bit, but that's how much we have for now. But we're still in the game. Businesses, those are real investments. What Brennan shows you are real investments. Everything else, when it comes to insurance, is just a selling point. So quick question, class. What is the primary goal of life insurance companies? Let me go into the chat. What's the primary goal of life insurance companies? There we go. Make a profit. Take your money and hope they don't pay out. That is true. Sell, sell, sell. So see, this is how I know this is a very financially intelligent group because most would have said, to insure me. No, not at all. This is why life insurance companies have the biggest stadiums. They have the biggest forms of real estate. They invest in the hugest stadiums for concerts and football and basketball and baseball. Have you seen their buildings, ladies and gentlemen? There's a reason why they would love to sell you whole life and sell you IULs. So the primary goal of life insurance companies is to make money, is to profit. Now, their sub-primary goal is, yes, to insure your company, is to insure you. That's what they're in the business of. So I'm not going to knock them, break them down too much. So this is a perfect example of what life insurance is. There's a lot of things on the screen. I'm gonna put this down a little bit. So this is a primary introduction of what life insurance is. You have dad, and these are just basic numbers we're gonna run through. You have mom that makes $5,500, dad makes $5,500. I know people make more or less, and I know the 11,000 is not what everyone uses. We're not supposed to be using all of our income just to do this, but it's just a projection. So you have a husband and a wife. You have two breadwinners who are bringing in money to the family. And what happens if that one of the breadwinners does, passes away, God forbid, right? What happens if that person is no longer here or no longer able to produce income? So there's a whole lot of things that are still here. The mortgage still has to be paid. Cars still have to be paid. Health insurance, credit cards, utilities, groceries, etc. There's still an income that is needed for this family to thrive. And here's some of the alternatives. GoFundMe. Some may say, well, Dario, I don't need insurance. Let me do GoFundMe. Let me just, do something like this. Let me just do some crowdfunding. And these are real actual GoFundMe pages. And this is not to knock anyone, but $30,000 for the Gotzi family. And that's all they needed, and unfortunately, he wasn't insured in order to do this. We also have this gentleman here with his two daughters. He only needed $10,000. These are the alternatives, and it should not be us. This is not a good thing. And just a little bit of info about GoFundMe. So GoFundMe, actually, early this year, these numbers they're not the total numbers as for December. I looked this up earlier this year. GoFundMe hit $22.6 million in revenue. This was early 2023. So listen, the platform fees, they make a whole lot of money from that. So we know that GoFundMe is not a good idea when it comes to insuring your family. It's not a good policy. Life insurance is income protection, folks. It's not an investment whatsoever. It is to protect your income. These are real investments. The real investments are brokerage accounts, individuals, 401ks, 403bs for those of you who work as teachers or drive the school bus, IRAs, 529s. These are just some examples. These are real investments. These are also real investments. Collectible cards, even cryptocurrency, bonds, your health, your education. And Brennan, do you mind if I jump into a quick whiteboard session here?
Go for it, man. This is great.
Okay, so check this out. Now I'm gonna break down some important things. You guys can see this, right?
Yep.
Okay, and pardon me if I'm going fast. I'm just trying to get through it because my wife has quite a bit of things to share with us tonight too. So I'm just gonna run through this as quick as possible. When I'm doing this with clients, I'm there for about 45 minutes or more, just on me running my mouth. But whole life, also known as IULs, infinite banking. Check my spelling, Bernadine, so I look crazy. Infinite banking. Let me tell you what goes inside of a whole life policy. Number one, it's the most expensive.
Would you throw MPI on this as well?
MPI, sure. MPI?
Yep.
There's so many creative names they have for this now.
I know.
So many creative names they have for these products. It's the most expensive. Okay. And here's why it's the most expensive. So these things are broken down in three. Your premium, let's call it the PR, is broken down into three sections. Let me tell you where your premium goes. The first amount of your premium goes to the insurance agent. He gets a cut. Second person gets it is the company. And the next one goes into the so-called cash value. Now, here's the problem with the cash value. The cash value, first and foremost, is, I'll call it CV. The CV is a loan. And in the state of Florida, the highest they can go is 10%. The highest they can go is 10%. Another thing is the fact that it's literally a cash advance, a high-level cash advance. Another issue we have with the whole cash value situation is that it takes 1 to 14 years for it to grow. And let me give you a personal story. So when I signed up with our whole life policy, I said, oh yeah, it's a cash account. I can take some money out. So what I did is I called Northwestern Mutual and I was like, hey, I want to take some, what do I do? Because I had $1 million policy. I said, what do I do if I'm going to take the money out? And he said, sir, take what money out? He was very rude, by the way, this guy. He was like, what money? I'm like, I have $1.5 million in life insurance. What can I do to take my money out? He was like, sir, you have no money. And he began to break it down, but I just was not paying attention because he was like, you have no money in there. He's like, you have to build it. So we spoke to our agent and I said, hey, can we take this money out automatically? He said, no. So you can have 1.5 mil. You can have $1.5 million in a policy. You can have $1.5 million, but that cash value, that so-called cash value, you fund it. You have to fund it. You put money in there. Meaning if you've got, I was like, oh, so that means if I have an extra few $1,000s, I put it into the policy and then I get the money. They were like, yeah, that's not your money. You have to fund it. And here's the funny thing, folks. When you put that money in, you can't take that money out anymore. It comes out as a loan. Okay. Now, the reason why I say term and Brennan say term is the best bet to go. Oh. For term specifically, it's the most affordable. It's flexible. And guess what? The most important part, you get to actually invest in the stock market. So when you're dealing with a whole life in an IUL, it's such a bad product, and there's a lot of play on words as well. I'm going to go into this real brief before I conclude this. So this is one of my clients, literally. Took her name out, removed all of her information, and she found me on Instagram, and she was like, hey, I see you posted something about life insurance. And she didn't come to me because she wanted to switch her plan. She was like, hey, could you take a look at my policy? I've had it for some time. I took a look at it and I automatically saw it was a whole life policy. I'm like, okay. So she's paying about $82.61 every month for the policy. And I was like, okay, cool. But I took a look. I was like, hey, they're saying that in 15 years, you'll have $9,611 inside of this whole life policy. She was like, yeah, that's my money. I said, yeah, it's not your money. It's actually a loan. And we found it in her paperwork where it said that. She was like, wow. And then I said, listen, I said, client, let's run some numbers, right? Let's say you took $82.61 and you put it under your mattress. No banking, no interest. It's not growing. You just take $82.61 and you throw it in your mattress for 15 years. You're going to end up with $14,878.08. I was like, the math is not mathing. And she was like, wow, it's not making much sense. So you mean to tell me that I can actually save that same amount that I put into this policy for myself with no interest, is not growing, it's not in the market, it's under your mattress, and it's going to grow more than this so-called cash value? I said, yeah. So we got her insured. She got $500K for $64.59. When I tell you it's more affordable, it's really more affordable, because that money that you're putting into these whole life and IULs should be going into investing. It should be going into the stock market for real. Okay, so this is a basic illustration I like to share. Okay, so we have couple John and Mary, 35. They've got $250 as the life insurance, right? As their life insurance, meaning if they pass away, $250 is paid to them, but it's inside of an index universal life insurance. You guys are very smart in here. Whenever you hear the word index, we were trained. Whenever you hear the word index, it stands for the stock market. That's not what it means here. It's supposed to. But that index universal life, it does not go into the stock market. So what they do is this. They're saying that we're going to pay cash into your cash value based on what we think the S&P 500 may do this year. Very deceiving. And I found this out a few months ago, and that scared me. I said, wait a minute, this is a financial product that says index. If you're getting your Series 6 certification, if you're doing life insurance, you learn that index means stock market. It's not what it means. Very deceiving. But anyway, so they're paying $251 a month. And they're supposed to be getting cash value at 65 of $127,000 at the end of this at 65. So this cash value, first of all, is not theirs, but they're paying $251 every month for this policy. But if they get a term for the very same face value, which we say the face value is the death benefit. I'll say that the death benefit at $250,000 for each of them. Now they're only paying $82, just as you saw my client prior to. She's paying substantially lower than what she was paying before. So for the same policy with a term, they're paying $82 a month. Now the difference of that $169 goes into a Roth IRA, could go into investment, whatever the investment vehicle you feel comfortable with based on your research and what the returns are, how you want to invest. Now with just 9%, which is very low within the market, they're better. They finished with $311,000 plus. So it just doesn't make a lot of sense. It doesn't make a lot of sense when it comes to that. So that was my talk. I didn't look at the chat. That was my talk for this whole thing. So yeah, it's a very glorified cash value account. We highly recommend that you go term if you really want to invest. And please pay attention to these policies. Make sure you're reading, make sure you're paying attention, because a lot of these things can get funny. And by law, they're not even allowed to say that these are investments. But I'm sure on social media, I'm sure out there, the agent will tell you that you're investing. And now, as you know, oh, sure. Should I go into the questions now, or?
Yeah, let's do the insurance related questions before we hop. Yeah,
Sure.
and I hear that all the time on social media. It's like, oh, this is an investment. It's sickening. But anyways, so the first question was, what if my policy is a term and a perm through Northwestern Mutual? How would I go about canceling it if I want to move forward?
That's what we had as well. We had a term and a perm, because here's the thing. They kind of are up to speed with knowing that people are kind of paying attention to what's going on. So they give you a term and then you get a whole life policy as well. What we did is I canceled my term and I canceled my perm, but it depends. It depends. If you have a term policy with Northwestern Mutual, you're comfortable with the price, you're comfortable with the death benefit, hold on to that term. Never fully cancel your life insurance. For example, some of you in here, if you only have a whole life policy and you're like, Dario, I heard enough, I'm canceling mine. Do not do that. Do not cancel your policy until you have another policy. So what I did is I canceled my whole life. I gave them a call and they're going to say, do you know why? What's going on? Is something happened? You're going to tell them, no, I just want to hold on to my term. My term's enough, or I just want to increase it for a good price, but for sure cancel it. And they're going to send you whatever leftover funds that you have, which is considered the cash value, but it's not. So if you have a term and you have a perm, I would hold on to the term if you're okay with the face value. If the term amount is okay, so if something would happen to you, God forbid, you feel your family would be in good standing, hold on to that and get rid of the whole life if you're not comfortable with that as well.
The next question was best term life companies question.
Ooh, best term life companies. I didn't want to go into this. All right. All companies have a term life. And it's usually it's far more affordable than the whole life. The best companies, I would say Primerica, to be honest with you. They're very affordable. I wouldn't say there's a company that has the best. I like Primerica policies, but I wouldn't say what company has the best, because most term policies are very good. Now, remember, it's based on age. So depending on what age you are, the 31-year-old that I insured, she's 31. Someone who's 39 is going to be a little bit more. So any companies who sells term, they're pretty good. It's just the whole life and IUL that's really bad, you know?
I think like the company that sells, like the insurance agent that you speak with, if they're going to give you a term and they talk about investment as well too.
Mm-hmm.
So I think it should be more of the professional you speak with.
And that's why we love Primerica, because our financial advisors work from there, and they were the first ones that was like, hey, you guys are not invested. And folks, that's what broke our hearts the most, because we have 2 kids and we were trying to set things up for our families. And we were under the impression that having a whole life in IUL, we were doing the right thing. And we found out we were not investing in the stock market. And that's very scary. So how I would go about getting a term, call all the companies. We've got to get into the habit of doing our research. We've got to research. Call all the companies that you can for term, and then you shop around, because the power is in your hands.
And let them give you the education.
Yeah, it's in your hands. Search all the companies, sit down with them, have a meeting, and you get to choose which one is best for you and your family.
Yeah, I love that answer. And also, guys, like a good broker for everybody here. I think we have a link in week 12, week 13-ish to give you, if you guys are looking for somebody. We have a lot of people within as well, so you guys can get there. Here's the next question. So if I don't have a partner, who would I have as my beneficiary? And dumb question, but if I do die, it passes out the full amount instantly, right?
Not a dumb question whatsoever. To answer the first portion of it, your beneficiaries can be nephews, nieces. It can be anyone. It could be a favorite coworker, literally.
I think I can jump into that when it comes to beneficiary, because I always harp on my clients about when you do have like life insurance or investment accounts, like you always want to have a beneficiary. And so it's up to you of who do you want to have as your beneficiary? Is it going to be a minor child, or is it going to be an adult if you don't have a spouse? Because If it's a minor child and you name them as a beneficiary, it's automatically going to go through probate and a guardian is going to have to be issued for it. And so this is where estate planning comes in. If you do want to leave your insurance policy to a minor child, just leave that insurance policy into a trust, and the trustee can dictate, or you have the terms of how you want those funds to be dictated to the minor child. Or if you just want an adult to be the beneficiary, you can have that too. And yes, they will get the money instantly.
Mm-hmm. And you could be very creative with a beneficiary. In life insurance, we've seen people put their church as a beneficiary. They'll put an organization as a beneficiary. They'll put a school, a charity. So there's so many creative things you can do with that. Very smart question about it.
Love it, guys. One last question on insurance I see is, does Northwestern Mutual only have one product for term? I just recently signed up with them, but waiting to hear if I'm qualified. Don't know if you guys would know that.
One product, I'm not too sure. I'm not sure. Did they have one product? Does Northwestern Mutual have one product of term? I'm not sure.
One product just term by itself?
For example, if they have different type of term policies, different type of term
Within the organization, like
Within
how
the
many term
organization.
policies they have. I'd say it's there's probably some variation to it, I would assume.
I'm sure.
Yeah,
Oh,
yeah.
yes. Okay, so
I still have mine. Yeah.
so here's what we found out about the term. You might want to do some research with that too, because all right, so there is a term 10 that's not really term. It gets really funny. Because one of my friends, I was helping him with his policy, France. He had a term with Northwestern Mutual, but come to find out it was a term 10, which means it's like a whole life policy, but it increases every year. I know, a lot of research.
That's some good marketing right there.
Yeah. Tell me about it.
Maybe unethical, but
Yeah, for sure.
okay. Can you put a trust as a beneficiary?
Yes.
Okay.
Yep.
And then I have my spouse as my primary beneficiary, my 2 children as the contingents. Should I change that to a trust? They are both minors 1 and 4.
Yes. The contingent, yes. If they're minors now, I would definitely change the contingent beneficiaries and name the trust as the beneficiary if your husband passes away before you pass away.
Love it. Okay, that's all the questions for that. Let's get to the second half of it, which is the estate planning side.
Yay, estate planning. So when it comes to estate planning, so a lot of times we hear people talk about estate planning, generational wealth. And when we talk about generational wealth, a lot of times people don't know, like, okay, if you're trying to establish generational wealth, I mean, estate planning is the core part of it for you. And so just like Dario was saying, when you're looking for insurance agent, you have to do your research to find people to be part of your core team. And the part of your core team, like we have the generational nutritional wealth, is you must have your estate planning attorney. You must have your financial advisor. If you're not into investment, you don't really know anything about it, you have someone who does know about it, you want to talk to them about it. You must have your CPA because it talks about a lot of taxes and, try to avoid paying a lot of taxes. So your core team should include these professionals in it when it talks about generational wealth. So with my slides, I'm going to talk about it in a different way where there's some problems and myths when it talks about generational wealth. As you see on the screen, these are some of the people who died without estate planning. And as you know, with Chad Boswick, this is the one that recently passed away. I believe it was 2020 or 2021. But, he didn't have an estate plan at all. And so what happens with his assets and his estate, it had to go through a probate court. And with him making lots of money, not having a plan in place, you leave it up to the court to decide who your assets goes to. And not even that, you get taxed like 40% of anything that's over the tax limit. And I believe with the federal, it's if you have more than $12.5 million, anything over that amount, your estate is going to get taxed. And so like, those are one of the things that would happen if you die without an estate plan. I found out about Michael Jackson, if he's on there. So guess what? He actually created an estate plan where he created a trust, but he didn't fund it. So we're going to go through all of this where we talk about like estate planning and the different things that goes into it. So the problem that I have is people always talking about, generational wealth can't happen. And the number one problem is that people pass away without an estate plan, just like we talked about, the professionals or the celebrities who died without an estate plan, or their plan is outdated. And sometimes some people will be like, okay, well, I did have a plan, but yeah, it was 20 years ago. Well, a lot happened within 20 years. So when you do create an estate plan, whether it be a will or a trust, you have to get it updated every 3 years, or when something significant happens in your life, meaning that if you had a new child, or you bought a new house, or you're divorced, certain things, like you have to get it updated. And so a lot of people ended up not getting that done, and they pass away without a will. And what happens is it creates family conflict. So in the time and need where your family should be grieving or mourning, now they have to think of, okay, well, I can't grieve right now because I need to know, what did mom and dad or sister have in place? Like, did she have a bank account? Where's the bank account? Did she have life insurance? Are they going to contact us? Does somebody owe her money? Like, if you have no information, you're going to spin out of control because there is no planning that was done. And I know in Florida, when there's nobody claims funds, it goes into an unclaimed property, and they have like millions of dollars there just sitting there with people not claiming the money because they don't want to go through the hassle. But if you're working and you're creating these assets, it's more now to have the plan done to dictate where you want your assets to go. So the number one problem is people are dying without a estate plan. So then people talk about the problem is generational wealth is rarely explained. So a lot of time people is like, okay, well, generational wealth is not actually real because there's no way the money can pass down to family. Well, that's not true, because if you do create an estate plan and you educate your beneficiaries regarding the estate plan, then that's how generational wealth is created. When we talk about our team of people that we have, for instance, you create a trust for your family, right? And then you have a trustee. This is the person that's going to be managing the trust for you. This is where you build that team. I'm going to speak with my CPA. I know who the financial advisor is. I know who the life insurance agent is, the investment person is. So therefore, all the funds that's in the trust, how do we grow this money to pass down to our generation for it to continue to happen? And also you educating your beneficiaries regarding it, meaning that your children as well. So it's not like just you're creating all this assets and just want to say, okay, I'm just going to give it to my child, but they also have to be educated in order to continue the wealth. So when we talk about estate planning and not commonly understood. So when we talk about estate planning, it's just like it's like an umbrella. And underneath the umbrella, this is where you have the different tools of how you can pass down your assets. So as we are here today, we're living, we're creating or generating assets, we're building, assets for our family. What happens to those assets upon your death? I mean, that's like the biggest question. Like, what happens to it? And so this was where your estate planning comes into place. And when you do have an estate planning, it's more dictating, what is your plan? How do you want your assets to be passed down? Who do you want to handle your assets? Who do you want to take care of your children? If you have a special needs child, how do I make sure my special needs child is protected? So these are different questions. Like if you have elderly parents, if there's some type of Medicaid planning that needs to be done. So this is more of having a plan so you can transfer wealth. And the way you do it is you can have a will or you can have a trust. And we always get, questions about what's the difference between the will, what's the between the wills and the trust. So with both the wills and the trust, they both will dictate, it's a document that dictates how do you want your assets to pass down, right? However, with a will, you will create a document and then you would have in that document how you want your assets to pass down, but your assets that you have now will remain in your name. So you'll create a will. Once you pass away, the executor or representative that you included in the will, which is the person that'll be handling your affairs, will have to go through the probate court, which is a system where the judge is going to look over the will to make sure and ensure that it was done correctly. There's no second will or anything. And once he or she determines that, then that's when the judge will sign an order to transfer whatever was in your name to your beneficiary when it comes to the will. When it comes to a will, once you pass away, everything is frozen. So if you had businesses, bank accounts, any other assets that you have, it's frozen. Nobody can touch it. Nobody can use it until the estate is properly probated. With the will, you have to notify all the creditors. And it's just like a long process and paperwork that goes with the will. And when you do have a will, you always have to go through probate. There's no way of avoiding probate when it comes to will. When it comes to will as well too, if you do have minor children and they are a beneficiary, there's going to be a guardian that's going to be put in place. And once that child is 18 years old, then that child is allowed to get whatever assets was left for them within the will. With the trust, it's totally different, right? So with the trust, you get to dictate how you want your assets to pass down, but with the trust is more extra because you can put restrictions on there. And what happens with the trust, you create the trust. And when you create the trust, you have to fund the trust. This is where I was talking about Michael Jackson. He created the trust, but never funded the trust. And when I say fund the trust, meaning that if you're going to put your home into the trust, you have to retitle the deed of your home to the name of the trust once it's created. If you have life insurance, the beneficiary will be the trust. That's funding it. If you have bank accounts, you can retitle your bank accounts and name it in the name of the trust, or your beneficiary can be your trust that you've created it. So that's how you fund the trust. And once the trust is funded, and once you pass away, you pick a trustee. The trustee is the person that's going to be managing the trust for you, meaning that they're gonna, because you've already done your estate planning, they're gonna know where the assets are. And so they're gonna gather those assets, they're gonna go to the bank, and then they're gonna open up trust accounts, and they're going to have to follow your restrictions, your instructions as far as what happens with the property, what happens with my life insurance. This is pretty good for, I would say, you know, when you do have minor children. I know someone talked about that, where you can put restrictions on there, where if you have several kids, you can create different trusts within the trust for them and tell them like, hey, if you don't graduate from college, yeah, then you're not allowed to touch this money. Right. You know, you can only allow to touch this money if you graduate school. Or if you want to start a business, okay, the trustee can give you money to fund your business. If you want to buy a house, okay, the trustee can help you out. So you can put much restrictions or less restrictions how you want it. However, the good thing about it is you will know, like at the age of 18, that your child is not touching that money because you put restrictions. You can have it as, okay, at 26 years old, you get a lump sum. At 30, you get a lump sum. And I think about like at 35, if I fully know you, I think at this point, you know, you understand finances, then you can have it outright. So a lot of times, you know, we would, people would do trust. And also if you have any children, you know, that suffers with addiction, these are like perfect tools to do estate planning, because once you pass away, that money is not going to go to that child. You can put it in a trust and make sure that child gets help before the money touches the children. So this is like what you call the revocable living trust. There's also irrevocable living trust. With the revocable living trust, you can put things in and take things out. It's revocable. You're the grantor, the trustee, the beneficiary. You're still actively owning all of your assets, but it's just in a trust. There's another tool called irrevocable living trust. Those are the revocable living trust when you talk about estate planning, when you're talking about tax strategies, and also when you're talking about Medicaid planning for the elder folks. So those are like the complex type that you would put into irrevocable living trust. And just those two things. But then what else is included into estate planning is you having your power of attorney and also your healthcare surrogate and your living will. When we talk about power of attorney, because this is like the core part of your estate planning and having a comprehensive part, because if you become incapacitated, meaning that you're unable to think for yourself, something happens to you laid up in the hospital, who's going to manage your affairs while you're in the hospital? Because the bills still have to get paid, the mortgage still have to get paid, things have to still go on, but who's your power of attorney agent? And that's included within the estate planning part, because you want to pick someone to be your power of attorney. So if that does happen, this person just assumes their role and continue to manage the business for you, pay the bills for you while you're in the hospital and you can't do it by yourself. And also having the healthcare directive and surrogate as well too, meaning that if you incapacitated, who's going to make the healthcare decisions on your behalf? You know, if you don't have that stuff in place, then we're going to have to go to guardianship, and that's going to court as well too, to choose who's going to be your guardian.
And listen, this is the healthcare directive. I watched my wife go through a situation 2 summers ago where it was a grown 30-year-old woman who fell into a coma. Now, she fell into a coma, and her family, her mother was under the impression, I'm mom, I can go and get documentation, I can get her insurance, I can get her benefits. And come to find out, she could not. And that blew me away. I said, how dare they keep this mother from getting the daughter's information?
Right.
And come to find out, my wife was like, no, there's something called a healthcare directive and surrogate. That blew me away.
Because she's an adult.
Yeah, because I'm like, no, like the mom is entitled to her daughter's thing. My daughter said no. My wife said no. That's the daughter. She's 30 years old. She's a grown woman.
Yeah. So when you're 18 years of age, you're considered an adult, you know, by law. So therefore, you know, your parents can't get records that they would normally, you know, get for you. So that's why it's so important to have those two things in place, because if it's not in place, then it's left up to the court now to decide who's going to be the guardian. You may have a sister you don't get along with, or a family member brother you don't get along with, but these are the people that are activating, you know, advocating on your behalf and say, no, that's my sister. I can be the healthcare, you know, surrogate or a power of attorney. And you're like, I would never choose you. So it's like, to have that in place now is like part of your core estate planning comprehension plan. And so a lot of the myths that we get is more of, oh, I don't have enough money, or I don't make a lot of money to do an estate plan. Because when we talk about estate, everybody's talking about, like, you know, lavish estates, but that's not true. Everyone needs an estate plan. Everybody needs an estate plan, but you just have to tailor it to your needs and what your lifestyle is right now. So I always tell my clients, your estate plan is not going to be the same as an estate plan with my other clients, because everybody's family dynamic is different. Everybody's situation is different. Everybody's assets is different, but we have to tailor it to, what do you want? What assets do you have? Where would you like those assets to go if something happens to you?
You don't have to be a
What do you want?
Rockefeller. You don't have to be a Rockefeller.
So it's just you having that core plan put into place. So that's a myth. Like, you don't need a lot of money to have estate plan. A lot of people say I'm too busy or I don't have enough time. A lot of times is when you think about estate planning, it's heavy. Like, I know I'm talking a lot and it's very heavy, especially if you have minor children and your head start to spin. It was like, well, I don't know who's going to take care of my child if something happens. I don't have anything planned. So you start to panic and you're like, I don't want to do anything. However, when you speak with an estate plan, a qualified estate planning attorney, just bring all those troubles to us. We're going to just disperse it, and then we're going to make a plan tailored to your family. Okay, well, let's break this down. What do you want this to do? What do you want that? So you just want to speak with the qualified estate planning attorney to just help you navigate everything as far as when it comes to estate planning. So it's not like you not having enough time or you're busy. Sometimes the information is so heavy that you just don't want to do it. But if you sit with the qualified estate planning attorney, like, we'll knock it out with you in like an hour and a half. And another one is, I'm too young to start my estate planning. No, nobody is at age, just like death, there's no limit to it, and there's no age limit to estate planning as well too. Because, you know, once you reach the age of 18, you're considered an adult. You need to have some type of estate plan, because a lot of times with children now, they have they're influencers. They're making a lot of money now. One of the rappers from is it Quavo?
Yeah, Quavo.
One of the rappers. He was very young, like in his 20s. He had a lot of money and he did not have an estate plan, right? And so what happens to it? He didn't have any children. I heard he didn't have any children. He was not married. So it's gonna go to his parents. Now, mind you, it was said that his father was never in his life. Can you imagine that you have all this money, your father has never been in your life, now you passed away, now your father gets half of your estate? Yeah, that's crazy. So you're never too young to start an estate plan. I think everyone should have one, especially if you do have minor children. That should be like tomorrow's like that should be like top priority, I would say. And so that's the essential fact of when it comes to estate planning. I know I said a whole lot. So if you guys have any questions,
That was fantastic, guys. We have a few questions piled in. Let me see. I don't want to miss anything. Okay, so I think the first one was, do you have to wait until the mortgage is paid to create a trust and then put the house in the trust?
no. You can create the trust, and all you're doing is retitling the deed into the name of the trust. So you're still the trustee. So it would say trustee, like Dario and Bernadine Philippe as trustee, co-trustees of the Philippe Trust estate. So that's what's going to go in the deed. The mortgage is still going to be the same. In the trust, it would say, like for us, it would say, okay, well, the house is in the trust. If there's a mortgage on it, the life insurance is going to pay the remaining balance of the mortgage, and then the house will remain in a trust until the kids reach a certain age, or we can rent it out.
Mm-hmm. And then Dario, back to you for the IUL stuff. So I fell for an IUL with a premium of $1,500. Started paying the premium last year. I'm going to look into changing into term policy and then investing. Basically, I lost that money, right?
No, you didn't lose the money, because we have to remember that an IUL is still an insurance product. You're insured and you're paying for insurance. The only thing we're saying is that you can have higher insurance and you can pay lower to actually invest. That's it. But no, it's not you haven't lost any money because you're insured. It's better being insured than not insured. I have clients who have whole life policies, and because of their age, they have to hold on to it. Because they're near 70s, 65, 70s, it's not much we can do at that point. So you're insured. You're insured. It's a good thing. Now you're just be investing in an actual investment product.
Do you suggest having 2 power of attorneys? I'm thinking worst case scenario, my husband and I both being incapacitated.
Yeah, absolutely. So when I do speak with my clients and we talk about power of attorney, if you're married, we suggest that the spouse are the first, and then you pick a second one. I always tell them to always have a second one. If you can, have a third one as well too.
Yeah, I was about to say, we just did ours. I'm pretty sure we did a third one. I can't remember exactly. I should probably know that, but I think it was a third one.
Yeah.
What kind of document does my 19-year-old need for me to be able to make health decisions for her if she's in an accident?
Oh, yes. So power of attorney, the durable power of attorney, and also the healthcare directive, living will.
How much does an estate plan cost to you guys?
So with an estate plan, it ranges between 3,000 up until like 6,000, depending on the complexity of the plan. So
And that's really reasonable, guys. I paid, so my attorney I worked with, starting was like 3,500. That was like the cheapest, all the way up to 6,000. But then we also had a it was like 25,000 option as well, which obviously we didn't use, but that's a very reasonable fee there. So we'll link you guys, your socials, your emails, everything after this, and we'll save in the academy for you guys to always have people reaching out to you for different things if they need anything.
Of course.
You had mentioned something about doing 30-year terms for a specific reason. What was the thinking here? I'm 26. I'm looking for like 60-year, or do you re-up shorter policies?
Great question. Okay, so a lot of people get really uncomfortable with the whole life. They want to hold on to the whole life because they're like, no, I need insurance my whole life. And it's something that the insurance industry has used to make a lot of money, and agents. All right, here's something else I didn't mention as well. If you have a whole life or IUL policy, remember it's cut in 3 ways. The company gets something, the agent gets something, and it goes into the quote unquote cash value. Every time you pay that premium, the agent gets paid. Every time you pay your life insurance product in an IUL, in a whole life policy, whatever policy has a cash value, the agent gets paid from that. It gets paid a little bit. So imagine 100 clients, 100 whole life policies. That's a pretty big paycheck every month. So the idea of life insurance is only to protect your income. You're supposed to invest. You're supposed to have these 2 quadrants, these 2 very important products. Life insurance, just in case at 26, God forbid something happens and your family needs to cover your bills, they need to pass on some wealth, they can have that. But you're supposed to invest. So at 26, I believe you said,
Mhm.
at 26 years old, it's best to get a 30-year term. When you get the 30-year term, you're investing for 30 years. For 30 years, your money's working for you inside of the stock market. Brennan, I don't know what you teach your group, maybe crypto, all of the strategies, I watch your lives, all the strategies that you've been teaching within 15 years. Within 15 years, I'm pretty sure that your investments, if will not only equal, but may even surpass your life insurance policy. Now, 30 years from now, you're healthy, you're good, and you're like, hey, Dario, I'm still alive, I'm still out here, I've got a business, or I'm still working I'm still working. Okay, my 30-year it's over, it's a term, it's a certain amount of time. Now, there's something called a renewal term. So now you would go back and get a little bit of life insurance, maybe 10,000, 50,000. And instead of paying at 26 for 500,000, instead of paying $40, you might pay $120 at the age of 60 or 70 or 55. So the intention of having a term policy is to ensure that you have real money, you have real wealth, that you're invested. So that's the ideology behind it. So I would definitely get term, but make sure you're investing. The moment that you get that life insurance policy that is a term, make sure you're in the market, make sure you're out there generating money within the marketplace so that you can, fare better when you retire.
Yeah, that's a phenomenal point, guys. I know we'll answer a few more questions, but that is such an important part, because when we say term life and invest the rest, that's contingent that you actually invest the rest. Because
Very
if you
important.
don't, honestly, like if you weren't going to do it, like technically speaking, your money would be probably better off in a whole life. Just not saying it is, but like you guys get my point. So please invest so that you are self-insured eventually at some point. Tips on how to pick an estate planning attorney. We're based in Canada.
So tips I would use is when you look up an estate planning attorney, I would, number one, set up a consultation with them, because sometimes I do offer like a free 15 to 30-minute consultation when you have that immediate talk with them. I will speak with each one of them, and it's okay to shop around, because when you're looking for an estate planning attorney, you need someone that you're comfortable to speak with as well too. And I always tell my client that, because I want to be the best fit for you, and I want you to trust me that I'm going to be able to create a plan for you where I listen to your needs and we're creating something that's according to your needs. Because I know one client, went to someone, an attorney, and she said, well, I want to create a trust. He told her, well, you don't have enough money to create a trust. Like off that, like that's not the right estate planning attorney for you. I need someone that's somebody's gonna educate you, answer your questions, and you feel comfortable with speaking. Like when I speak with my clients, I tell them, I charge flat fee, and you can talk to me how long you want to talk to me. You can email me, because I want, when I create a plan for you, that you're not afraid to call me because I'm going to charge you. I want to create a dialogue until your plan is finished. So I think it should be more of the relationship, as far as, are they answering your questions correctly? Do you feel comfortable speaking with this person? So that's how I would look for a good.
Do you guys do plans in all states or just Florida?
I'm only licensed in Florida. It depends on what state, because sometimes I do know colleagues that'll probably want to review. Because I can do a plan for someone in a different state, but I would need a colleague in a different state to review the plan, because they're in a different state and their laws are probably different as far as like the execution of it.
Do you guys dissolve a trust once your children are older?
No, I mean, it depends. Like, it depends on what was your estate planning needs at the time. So if your children gets older and they're not young anymore, this is where I say, okay, let's update the estate plan, right? So do we have grandchildren? Do we need to update it? And now, instead of the children being the forefront of getting all the estate, do we want to leave some money for our grandchildren? Now that we're older, do we need to create something for Medicaid, because we're reaching that retirement, and if we make a lot of money, we won't qualify for long-term care Medicaid planning. And if you're trying to leave money, so it's different stages when you talk about estate planning. I wouldn't say dissolve it, because you need to know what type of children do you have. Do you have a child that's responsible, or is it a child that's irresponsible, or have an addiction or special needs? So this is where it comes to every 3 years having it to get updated. And if you have adult children, let's sit down again and let's talk about our family dynamics as it looks now, and then let's reorganize our estate plan. But I wouldn't dissolve it though.
Phenomenal, guys. So a few people asked, where are you guys located in Florida, and how can they basically contact you?
Well, we're located in South Florida.
South Florida, Fort Lauderdale
Fort
area.
Lauderdale area. So if you have members that lives in Florida, I can practice law anywhere in Florida.
Yep.
Yeah. So
And you guys don't have to be in person, technically speaking. There can
Right.
be-
No.
right.
So that's important to understand. Do you guys know anybody like in New York that could help out, or a contact?
Mm.
For estate planning,
Yeah. And FYI, guys, we do have contacts if you guys don't.
Okay.
If you guys do, go for it.
yeah,
Drop the names, drop the contacts.
I would have to look if it was on my social media.
Okay. Yeah, because that's what we're trying to do. We're trying to like, there in the world of financial industry, okay, in the universe of financial industry, we're trying to, and I'm sure you're doing that too, Brennan. We're trying to find the right people.
It's
in
hard.
every state,
Yeah.
because you're awesome. They may think we're awesome, but we don't know who's out there. So we're trying to, build some sort of universe or directory where we're like, oh yeah, I've got somebody in Canada, I've got somebody in New Mexico that we can refer to, that we know, that we trust. That's the hard part, but
Yeah. A lot of good comments regarding the presentation night, guys. Just saying thank you, great information, all that kind of stuff. And thank you again for coming on, guys. This was fantastic.
Thank you so much.
So
Yeah, absolutely, guys. So we will drop all the contact information. If you guys want to send me over all contact information you guys want dropped in, we save all these, so all the students have access to this for life.
Awesome.
I'll put that in there after this presentation, and we should be good to go.
Thank you.
yes.
Thank you so much for inviting us, Brennan. And once again, we're on a crusade ourselves because we spent several years, the first maybe 10 years of our marriage, not knowing anything, like kind of being lost out here, just taking information left and right. When I came into the financial industry, I thought I was good, Brennan. I thought I was investing properly. I thought I was doing all the right things. And it wasn't until I got licensed that I had to cancel all of these accounts and realize I was doing the wrong thing. I was following social media influencers. So we're on a crusade because, like, yes, it's good to get help. It's good to have people like Brennan. It's good to have people like us, but you got to take it into your own hands. You got to have the power. Do not be afraid. Don't be intimidated by this thing called the financial industry. It's just big words and numbers. But to be honest, we're smart enough. We're smart enough to make sure that we retire multimillionaires. Our families are good. Our health is straight. And, so we just want people to take the power back into their own hands. And you're doing an amazing job. Thank you so much.
I appreciate it, guys. It's one of my hardest thing to explain to like people is when I do come out about like the IUL or something like that, and I say something about it, like the shock actually in all that people have, like, what do you mean? This is like the best product since sliced bread. I'm like,
this product, yeah.
All right, this is gonna be a long conversation.
right. And it's us. That was us. I was the one who went into class and was like, hey, I've got all these policies. And the teacher said, because the classroom was so blown away in awe. And then the teacher said, wait, before you guys laugh at Dario, just being a responsible father.
Yep.
And there's a lot of people who are just like us, being responsible dads and wives and responsible family members, and trying to make sure that we're ensuring our families. They come to find out we've been had. Okay. We're being taken for a tailspin. Invest in the stock market, get term, trust me, follow Brennan's information, get a term policy, get as much as you possibly can for a small amount of money, and really make that money out here. Go start businesses, go invest in the market, play around with crypto, everything you learn here. And by the time you're in your 60s and 70s, I promise you're going to fare better.
Absolutely, guys. Again, appreciate you guys. We will save everything. Everybody else, I'll see you guys on Thursday.
All right. Thank you.
Thank you.
See you guys.